Hello, everybody, and welcome to another episode, another segment of Market Masters with Dr. Kirk Elliott himself. Today, we're going to be talking about quite a few things, kind of different things to sort of expand beyond what we usually speak about. Today, we're going to be speaking about cryptocurrency and strategic reserves, everything having to do with Trump, how that impacts not just the crypto market, but the world as a whole. We're also going to be getting some updates on the gold coming into New York and what that's all about. Is it speeding up? Is it slowing down? What that means for each and every one of us. And apparently, the GDP has gone negative for the first time ever, which is a very big deal that we're going to hear more about. And the whole goal of this segment, of this series in general, is to simplify the complex, making sure that you don't need to be an economist to understand these things, but you have one right over here, Dr. Kirk Elliott himself, to be able to share things and make it digestible for each and every one of us, how that impacts our investments, and what is the next best step to take. So with that, Kirk, thank you very much for being here. We want to hear all about it, starting with crypto.
Oh my word, it's so great to be with you as usual. And earlier in the week, um, Trump made an announcement. Actually, I think it was over the weekend, but he made this announcement that the strategic crypto reserve that he's referenced before, he actually named names this time, right? And to me, words have meaning, but the order of words also have meaning. When you're like listing something out, you usually put the most important one first.
Yes.
Well, you and I have talked a bunch about XRP, how I think it's going to be the kind of cross-platform currency transaction mechanism moving forward, right, under digital world. Well, it's interesting because 2 days ago, the European Union said that they were going to move away from payment processors as we know it and go to blockchain.
Yep.
So if they're going to go to blockchain, what are they going to use? Probably XRP because it's what other central banks are starting to use. It's what American Express, Amazon, Bank of America, I mean, and even the Fed, right, saying that ultimately they're going to get rid of the SWIFT system and go to a new, I mean, so for all of your viewers, which are very astute, I mean, what that does is when you have this distributed ledger, it's fast, it's cheap, and it's almost immediate. Now, people think that wires are almost immediate. Well, it still takes a few hours for that to clear, and it's like 45 bucks. These are not. They're like instantaneous and very, very inexpensive to handle. So I have no doubt in my mind this is the way that the world is going. Now that you have an entire continent of Europe that said they're going in that direction to blockchain for payment processing, it's like, okay, this is right underneath our nose, right? It's not even a thing of dystopian future anymore. It's like, it's right here. Now, this is interesting to me because as this is going on, we have to take a step back in history just a couple of weeks
Yep.
to when Secretary Bessent was with Trump when he signed the executive order for the basically the sovereign wealth fund executive order. Well, in that statement, he said we're going to monetize the assets of the US balance sheet.
So
Then
now
they added,
this extends to crypto.
I believe so. I mean, that's what whenever so what they said that, and we had talked about what does that mean? I mean, how do you monetize the land? Well, they opened up 628 million acres of federal land for drill baby drill, right? They're going to drill on it. And now this, the strategic crypto reserve. Now, when they talk about a strategic crypto reserve, they didn't mention the word stockpile, which means you just have a bunch and it sits there and you sell it at some point down the road. It's more of a, I believe, a continuous allocation into it. That's going to be part of the reserve, right?
By the way, did you hear on March 7th they're holding this exclusive crypto event with some of the top crypto whales in the world
Yeah,
at the White House?
yeah. So that's in 3 days. That's on Friday.
Yeah.
So speculation is, and you have to say who's going to be there. Well, the three that he mentioned, Cardano, Solana, Ripple. I mean the U.S. companies, which is he wants to have this U.S. based as much as possible. But the talk of the town is that he might make crypto liquidations capital tax free, so there might be no capital gains tax.
Wow.
I mean, if that's actually true, it's going to be a game changer,
You know
right?
what's
Because
interesting though? I mean, the past, I think it was 2 or 3 days ago, it was the biggest drop we've ever seen in
yeah,
crypto while all of this is happening. And on one hand, it doesn't make sense to me. And the only way that I could make sense of that is there are certain people that know it's about to go up. So let's dump it in the short term so we could buy it and make a lot of money in the near future.
well, I don't care what the market is, there's always people who know how to manipulate it a little bit.
Correct.
I mean, the fact that it came down and mainstream media was saying, "Oh, well, Bitcoin actually follows the Dow and S&P 500." So as that comes down, that's going to go. That makes actually kind of no sense to me, that argument,
Correct.
right? But yet that's the argument that they make. So here's the thing: it comes crashing down like insane amounts. I have a feeling people were buying it up at those levels because the day that Trump made this announcement, which was just a couple of days ago,
Yep.
XRP went up 33%
I
in
saw
a
it.
day. In a day, right? So no doubt in my mind, somebody's profiting from these kind of things, but the profit isn't to be had right now. I think the profit's to be had in the near, medium, and long-term future in some of these things. Now, as we start to think about what crypto is, it's going to be kind of the wave of the future, whether it's going to be central bank digital currency or decentralized blockchain, it's here to stay.
Correct.
So the decentralized blockchain, the attractiveness of it is the same attractiveness that people have for gold and silver, which are it's get out of the system, it's considered private, gold and silver considered private. You can have growth. Yeah, people look at gold and silver for growth. Look at what it's done over the last few years. But it can be used in different ways in exchange for a central bank digital currency, which is all about Big Brother and the elimination of financial privacy and everything.
Yeah,
So,
but technically, I mean, with crypto also, it's tr it's like not traceable, but everything at the same time is public. So I don't know, because on one hand, yeah, I get it. People are saying let's use it to get out of the system, and I'm in it myself. I am an advocate for it because I see that it's going to go up whether anybody likes it or not.
yeah,
The question is with gold and silver, you can always buy that in a way where really it does stay private and you have something that nobody can hack and take or anything like that. But when it comes to crypto, as decentralized as it may be and all that, it's still something that doesn't really give you much privacy. It's the exact opposite.
yeah. I mean, I guess it's safe in the sort of sense that it's an immutable, can't be changed, verified ledger.
Yeah.
However, it's still digital. And this is where there's a problem with most of my clients. I've got, I don't know, 40,000 of them all over the world, right? It's like they're all, I shouldn't say all, 80% of them are 50 plus.
Okay.
They're going to say, I don't want to set up a coin wallet. I don't even know what to do.
Yeah. Yeah.
How do you get it out? What if I need money? What if I need monthly distributions? Blah, blah, blah. It's like, yeah, it's different, right? 10 years from now, or even 2 years from now, I bet it's all easier and it becomes more of a norm.
Yeah.
But for right now, it's certainly not. So most of my clients wouldn't touch crypto with 1,000 foot pole, where they would touch gold and silver because it's physical. They can touch it, they can feel it, they can take delivery of it.
You also
You
have
can
less
use it for barter.
volatility. You have less volatility on you're never going to see silver and gold fluctuate 33% in one day. So even with Bitcoin and crypto and whatnot, there may be some upside there, which I guarantee there
Yeah,
is.
yeah,
But there's also a lot of volatility. And if you don't have the stomach for that, I mean, I'm seeing friends of mine that have accounts with $1 million swings every single day.
yeah.
What's going on? And those same people that have that same amount allocated in silver and gold are seeing much less swings. It is somewhat slower growth compared to it, but again, with higher growth, you have higher risk.
Well, yeah, I mean, there's in a world where there's no guarantees, here's a guarantee. Things will go up and things will go down, right? So, to what extent do you want the volatility, right? Some people just don't have an appetite for big swings. Some people do. Like younger audience generally does. Older people, because they're getting so close to retirement, they don't want to have anything that's considered risky.
Yeah.
So therefore, they go with things that are more stable, like gold and silver. So, point though is the fundamental issues that cause people to want either one of them are the same. Get out of the system, having something that's private, having something that could grow. So they're just different ways to get to the same safety place in people's hearts and minds. Now, when we're talking about gold and silver, over the last month, there's been this massive exodus of gold leaving London and the rest of the world and showing up at New York COMEX depositories, which we've talked about. Now, that actually seems to be slowing down some, probably because London has basically almost run out of gold, right? It's like you can't move something if it's almost gone, right? It's
So
done.
what does that really mean?
So that means that they have to still provide physical delivery of people whose contracts are expiring. So when they don't have a lot of inventory, they're going to have to find it somewhere and pay whatever price need be, or else they're in violation of the contract. So physical delivery upsets the apple cart a lot because normally in futures contracts, people don't have physical delivery of the underlying asset, like
Okay.
pork or hog, pork bellies or corn or soybeans or wheat or oil and gas, right? They have a futures contract. They settle in cash. They'll sell it. They'll get the funds wired to them. They'll go into the next contract. That's how the game's usually played. Unless you're a manufacturer, meaning you would then have a futures contract to solidify a future price that way it can balance out your cost estimates moving forward because you know what you're going to pay. And then they do take physical delivery. But investors normally don't. This world seems to be a lot different right now where somebody somewhere is taking physical delivery and a lot of it,
Yeah.
right? So it's slowing down on gold because it's probably running out. Now, what's not slowing down is the silver now entering COMEX depositories in New York is exploding, just like gold did a month ago. And during that time, we saw gold surpass all-time highs.
Yes.
So what's coming next for silver? I think it's going to be much better growth than what we saw with gold because gold is not a manufacturing metal. It's a financial metal. It's a barometer against political distrust and chaos and economic instability. Silver does the same thing, but it's also used for all forms of manufacturing in electronics, solar, electric vehicles, nuclear power, all that stuff, right? So it's always needed.
Yeah.
So here's where somebody somewhere is taking physical delivery. This is why it has to come back to COMEX from wherever it was living before. That you can't deliver something that you don't have possession of. So they're acquiring it however they can, getting it into the depositories. That's why the inventory is exploding. Well, they're not just getting it to get it. They're getting it because they need to do something with it, right? So how do I know? Because if you look at the COMEX, data points in, let's see, it would have been in January, or I'm sorry, the February futures contract had about 5,000 contracts that were delivered,
Okay.
which is I don't know, 5 million tons ish. So now you look at what's happening in the March contract. It's over 11,000 contracts, which is pushing, I think, 59 million ounces of silver so far. And
Wow.
the contract's not even over. Nobody has ever seen this kind of physical movement of metals. So who's taking delivery of it? And so, when it was coming in, people had the talking point, well, maybe they're just trying to get it across the border because of Trump's tariffs.
Yep.
They don't want to pay them because Trump's tariffs should come into effect today on Mexico and Canada. Well, this is March 4th. So what we don't know is what's going to be excluded. Now, this whole tariff story is mind-boggling to think about the ramifications of it. Just on silver, 80% of all the silver that's used in refineries in America comes from Mexico. So if there's an across-the-board tariff of 25%, overnight that price goes up 25%, pretty much.
Understand.
Now, what's Mexico going to do? See, Trump has used tariffs not just as a mechanism to raise money for the country, right, to hopefully avoid income taxes down the road, but it's a negotiating tool because he's used it to say, okay, we're going to slap tariffs on you, Mexico, unless you stop the fentanyl trade coming across the border. Well, then what did they do? They sent 10,000 Mexican troops to the northern border of Mexico to help stop that. So Trump delayed the tariffs for a month. But they go into effect today.
Okay.
Now, Trump also put a 10% tariff on Chinese goods.
Also
Well,
today.
yeah, that was actually before.
Yeah, but there's
Um,
another one coming now.
there's another one coming, but what is Mexico considering? Mexico, to avoid Trump tariffs even more, this could be geopolitical conflict extraordinaire, wants to possibly match the US tariffs on Chinese goods.
Okay.
So a lot of Chinese goods go to Mexico to be manufactured. Like if they're making cars or whatever, it's cheaper to build a manufacturing plant in an inexpensive country that shares the border with the United States because it's real easy to get it here. So they're doing a ton of stuff for China. Now, if they slap a reciprocal tariff on China of 10% to match the US because they don't want Trump tariffs, now China's going to be ticked at the US and at Mexico.
Yeah.
Right. And so this becomes very problematic, but it becomes very inflationary. Now,
The tariffs also they're problematic because although I understand the intention is let's get as many people to start buying from the US as possible, it really does change prices for companies that are selling products, and the products will eventually have to get more expensive. So I hope I don't know. I don't know, where it's going to end and how it's going to exactly unfold, but I think right now the biggest problem will be in the short term for the
yeah.
United States until things actually evolve and transition because prices overnight are just going up.
Well, I agree 100%. Right. So the end of last week, Secretary Bessent said that, hey, Trump's tariffs are not going to impact inflation. Like, wait a second. Is he lying? No, I don't think he's lying. Because his rationale was that China's just going to eat it because they don't want to lose the US consumer. Okay, so if they eat the tariffs, the prices are still going to go up.
Yep.
It's just going to be part of the price, right? So, but what he's talking about is a future time, maybe a long time down the road, maybe 6 months from now, because what we're seeing is we have to have time to retool, to bring the jobs back to America, to manufacture the stuff that was done there. Until that point, we're still buying Chinese goods. So in the short term, inflation does go up. In the long term, inflation comes down because people are going to start buying American, which aren't tariff impacted prices. So he's not wrong. I think he's just wrong in the short term.
I understand.
Now, in the same conversation, he also said he came up with a word. He didn't come up with the word, but I've never heard the word before, vibe session. So vibe session is a compound word meaning vibe, like the feeling of people, right? What's the vibe that we're feeling right now, right? And session meaning recession. So vibe session means that people are thinking something that isn't actually the economic reality. So, for example, all the talking heads on mainstream media and these financial news channels were always saying Biden's economy is really good, right? And he did a great job. And look, we're beating the battle of inflation. And the morons that listened to some of these shows believed it, even though your wallet didn't say the same thing. Go to the grocery store, it's not the same. But that's vibe session. So now you've got Trump coming into office. Everyone says he's an amazing businessman, president. He's incredible. He's going to turn the country around. He is. But what the vibe session part of that is that the economy has boomed, right? Starting. You look at the stock market, you look at things like that, and people's expectations. If you look at consumer confidence numbers, through the roof. However, we're in the hangover effect from the Biden economy. You've got jobs that still aren't there. Inflation is still persisting. People are still not spending as much because they're living hand to mouth, month to month, right? And now the reality is the Atlanta Fed just came out with their GDP numbers. They're negative. See, they were expecting like plus 3% or something like that, and they were like minus 1.9. That's a huge swing.
Yeah.
But this is the first time, Jason, that I can actually remember, and I've been doing this since 2002, that the GDP, maybe outside of right after 9/11, that the GDP is negative.
So
Meaning
what does that mean in translation for us?
that means GDP is gross domestic product, how much we are producing domestically and consuming. So GDP is a measure of retail prices that people are spending on stuff that we produce here,
Okay.
right? Not elsewhere. China would have their own GDP stuff that they manufacture. So in a growing economy, for economy to grow, GDP needs to grow faster than inflation,
Okay.
right? So technically, I think we've been in a recession since COVID because you look at what inflation has been, that's been like 12 to 15%. And even when they say the GDP is having an amazing quarter and it's annualized at 4 point something percent, well, you're still losing 11%,
Yeah.
right? And so the only way for the economy to grow is for GDP growth rate to be greater than inflation. For that to happen, we have to be north of 12%, not there. In
So will
fact,
the
this
tariffs
quarter
help with
was
that?
negative.
Will the tariffs help with that?
Yes, because ultimately you're going to bring jobs back to America. You're going to manufacture stuff here and start buying American. So
I
in time, it is going to help, but not right now, not immediately, right? And so none of this that we're seeing, Trump is going to get the blame for it because he's the guy in charge right now. He's the one holding the bag when these kind of numbers are coming out. It's like, oh, look at Trump's fault. It's all because of his tariffs. No, it's not. This is the hangover effect from the Biden economy that Trump is trying so desperately hard to fix, and he's doing a really great job.
okay.
Look at everything that he's accomplished in the first 5.5 weeks. It's amazing, right? But here's where, as we move forward with some of this, Scott Bessent, Treasury Secretary, again, in the same statement that I was referring to earlier, said, my interpretation, the paraphrase, it's going to be kind of a rough patch over the next 6 months. But 6 months from now, mark my words, it will be Trump's economy, right? So you always have to atone for the sins of the father. Almost, it's
Yes.
like it's not like Trump inherited a great economy. He inherited one of the most stinky economies in American history, and it's just going to take some time to fix that.
Fair
And
enough.
that's what Besant was alluding to.
I understand. I understand. So silver and gold. Right now, gold is at 29.20 an ounce, $2,920 an ounce, almost all-time highs again. I think the all-time was like 29.50 something, if I'm not
Yeah.
mistaken. Gold is around 32, between 32 and 33. I'm sorry, silver is between
Silver.
2.
Silver 2 is right at around 32 as we record this. So it has a lot of growth ahead of it. It really does. Some of the more recent projections just from the last week in forecasts are, once gold hits 3,000, that's a very big psychological barrier. But once it does that, all eyes are going to be on the precious metals world, and that's when silver could jump astronomically.
Also, I mean, by demand, when there's more
Yeah.
demand, if you just want to use psychology without any fundamentals,
Yeah.
psychologically, when gold breaks 3,000 an ounce, which could happen any day now,
Hmm.
big news, big headlines, the common person going to be like, oh my God, okay, so the next one is going to be over here. Let's go invest there. The more people that want to buy, the more demand, the less supply, the higher the price goes. It's very basic.
Yeah. Very basic. I mean, this is where you've got this melding of two philosophies like technical analysis,
Yeah.
fundamental analysis, and human psychology, right? They're all coming together. And this is the making of a perfect storm in a good way. And so I want to encourage everybody that's watching. Okay, we've got negative GDP. Trump's changing things. You're possibly going to get rid of capital gains on crypto. Even if they don't, there's at least now a strategic crypto reserve. All of this tells me people are moving away from the things that have been to the things that are. So the things that have been central banking, fiat-based money creation, going away from that. Here's the thing for everybody watching this is the news from Europe about moving to blockchain for payment processing away from traditional banking. What is this going to do to normal traditional banks? There's not going to be as much demand for their products. I think they're already undercapitalized. And so as we move away to DeFi, decentralized finance, from centralized finance, as we've known it, banks start to lose their luster and you could see a run on the banks. And so therefore, how much allocation do you want to have into things that fundamentally, technically, black swan events are actually poised for kind of a correction? It's up to you, right? All of these are our own personal choices to make. And you might say, I love my bank. I've known my banker for like 30 years. It's
I
like,
hope
okay,
my bank doesn't go down.
I hope so too. I mean, you've had issues with banks in the past.
Yes, we
I mean,
were, what was that one called again?
Signature, wasn't it?
Yeah. Oh, yeah, that
Yeah,
was all of our business was with Signature. We got that news. We freaked out. We moved right
I
away.
know. You had to live through it. It's a painful process,
Yeah.
right? And so we just want to make sure that in life we minimize our risk, maximize our return. If you have
100%.
this gut feeling, if you have this intuition, or if something's just screaming at you from a headline, don't delay. I would just do it. I'd rather do something 3 months early or 6 months early than a day late, right? So, anyways,
100%.
yeah,
100%.
everything we're talking about is very, very good for what's moving forward in the economy.
It is. And I like that we have these recorded where people can watch because they could see a timeline of events over time, just like from, our shows almost 2 years ago. They see it may not have happened in 24 hours or a week or a month, but factually speaking, back then, silver was $18 an ounce.
Yeah,
Today, it's almost double. And it's only going to keep going. And one thing we do know for sure, just like you said earlier when we started, you said the only thing that we can guarantee in life is that things go up and things go down. But there's another thing that we can guarantee. If you look at gold and silver 30, 40 years ago to now, it's going up. And it's always gone up since it started. That's never, ever, ever, ever changed. It has phases of a few years here and there where it drops and it goes up and so on and so forth. But it's never changed long term if you look at the big picture slope. And I think that there's a time for taking risk with things like crypto, for example, where if you can stomach the volatility, awesome. And I think at the same time, it's very smart to allocate into things that are a little more secure, things that
yeah,
over time you can't lose on. I'm the type of person that likes diversifying, where out of 100% of a portfolio, you'll take maybe 10, 15, 20%, and you'll put that into more risky places. But that 80%, in my opinion, if you want to grow and create generational wealth, like I've seen in my own life, you need real estate and you need metals. You need things that are real, right? You need
yeah.
things that you can hold that show over time, no matter what happens, these are going up, even if in the short term you're going to have a cycle of some sort of recession or depression or whatever it may be. So that's why I do these shows with you, because I love the knowledge that you share with us. These are things that I don't have the time to research myself. And that's why I love hearing from you. And I know that's why everybody else loves it as well, because you kind of do that job for us. And then we know who to go to when there's something that needs to be done, investment that needs to be had. So for everybody that's watching this, if you do want to go and learn more about this, you want to book a free consultation, there is nothing to lose, only to gain. There's a link in the description below this video. Make sure to check it out. You fill out that form, you'll get in touch with Kirk's team. They'll get in touch with you as soon as humanly possible and teach you about everything that you need to know. And from there, I can almost guarantee you will want to move forward so long as you have the means to, because you can't lose. Long term, you just can't lose. And I love doing things like that. I love being a part of things like that. I like winning. I'm always a winner. That's how I was brought up. And we will always be on the winning side, whatever that side is. And right now, gold, silver is a very big piece of that, specifically silver with the upside based on the proportions and the ratios that Kirk has shared in the past. So I look forward to seeing more validation to everything that you're talking about, just like we've seen over the past 2 years. And again, anybody that wants to book that free consultation to learn more, link in the description below this video. Check it out, fill out the form, get in touch, and see where it takes you. With that, I'm going to leave it with you, Kirk. Any closing messages you want to share with everybody?
No, I mean, just watch the rest of this week. Things are incredible right now. Announcements coming up. You've got the Trump announcement on Friday. You've got the tariffs that possibly start today on the 4th. What's
Yep.
it going to be? What's it going to include? And you've got massive potential for an eruption of geopolitical conflict with Russia and Ukraine. I mean, all of this impacts markets, most traditional markets in a negative way, gold and silver in a positive way. So if you're thinking about it, if you're on the fence, give us a call, because I would rather be 3 months, 6 months early than a day late, and we'll help
100%.
you walk through that process.
And you don't want to wait and then be like, damn, I should have done it. I've had those
No, that's
experiences. They suck.
horrible. Yeah,
Kirk, thank you so much. Thank you very much for your time. I look forward to seeing you soon.
you bet. We'll see you.